Hey, welcome to the channel. Franco here with Trading Futures Live. And in this video, I want to show you a simple rule that you need to follow in order to become a profitable trader. Let's jump right in. And what I want to show you here is two trades. I want to show you two trades, one winning trade, one losing trade, and how I manage my risk, right? In this particular trade, my entry, my zone is between the two black lines, but I happen to bring the entry here because one thing and only one thing that I do not negotiate in a trade is an invalidation point. My invalidation point has to be included in the trade, meaning my stop has to be at the invalidation point, but I usually use a buffer. I give it a depending on how the volatility is for the day, right? So I do like to include the invalidation point and give it a little bit more because I'm risking in this trade around $930, right? And the dollar amount has to be according to your account, right? Depending on your account size. But more importantly, the risk has to be tied up to a ratio, right? The risk and reward ratio, because that's the secret, guys. You cannot risk X and make X. You gotta multiply that. You gotta make 2, 3, 4, 5X per trade. That will all right. So I did lose this trade, and what I usually do when I lose a trade, not immediately, but in the afternoons, I go and I check the trade. All right, what did I do wrong? May I or could I improve something in the trade, right? And if you guys see, this is the 30-minute, right? But I'm gonna put the 5-minute chart where you can see. Let me scrunch this a little bit, right? So this is like a whole week. 1, 2, 3, 4, 5, 6, 7, 8 trading days, right? So this is the day of the trade, and I was stopped out around here. Remember, I was biased long, right? And yes, this day went into the dip, but then at the end it ended up going higher, right? But either way, I lost money. So I say, right, how important it is for me to try to, assert the direction for the day if I'm gonna lose money. So it's not only have like the right context for the market, because even though you have the right context to the market, your timing has to be good or perfect, and your risk management. And this is the point of the video. The risk management is one of the things that is most important. Let me bring this chart here so I can have a better look here. There you go. All right. So what I didn't do in this trade, what I did do is, all right, I'm gonna choose all these pivots, 1, 2, 1 pivot, 2 pivots, and then I'm gonna try to trade here, right? But it's not bad. But my entry was in this red candle. It was already tested, right? So what I had to do was, all right, I do this every day, right? So I see the consolidation, right? And I can spot how from here it gapped up, and then it's trying to grab some more orders in order to keep going. So I put the horizontal volume, right? And this is the higher volume for the day, and you can see how important this point is, right? It just came here where the average for these 2 days was the higher volume, and then shot right up. So here's the thing. Do you see the gap? That's all overnight. I don't trade overnight zones, or let's say this, I rarely trade overnight zones. So what I could do in this scenario is, all right, wait for this pivot to be created, right? And after it goes up, it bounces back up, then I can have a retest in order to enter my trade, and then you have it here. And then you have it here, right? So let's go to the 1 minute, right? And if this thing shows the 1 minute, right, you can see here. And by the way, this is a regular trading hours chart. I like to trade the regular trading hours chart, meaning the overnights are not as important for me. So yes, here you have this rally-based rally, you have all these consolidation area, and the pivot, the entire pivot, right? So one trade opportunity could have been this week and trade long, but we're looking things after the fact, and I'm not a huge fan of doing that. But for the next time, I want to be aware that we had 2 consolidation days, right? We have 2 days that we were sideways, and then we went up overnight. So I want to be aware of this high volume created these 2 days. Okay, and with that, let's pass to the winning trade. In this trade, I had a limit order to short, right? And like, remember guys, I was risking $930 in the previous trade, but the important here is not the $930. The important here is the ratio of my winning trade. So how much I risk for how much I'm gonna make, right? And here, let's go and see what this does, right? Let me speed it up a little bit. All right. So I have my limit order at 12,306, and my target is 12,233, right? And like I said, guys, my invalidation point is the stop. Then I got filled right there, right? I got filled is inside the zone right now. I'm taking some heat, right? But that's normal. The zone is not very wide. It's around like 15 points or something. Per contract is like $300. A little bit more. I'm risking $730. Like I said before, I was risking $930 in the other one. But the caveat here is that this trade is gonna make me $2,890. So I ended up winning this trade, and after we hit target, we can do the math, but it ended up hitting target. So my point is, risk management is the only rule that I can assure you, if you don't have it, it's very hard to become profitable, right? You can trade any way you want. You can learn from anyone you want, but and there are different techniques: trend following, not trend following, contrarian, tops and bottom, and not picking tops and bottom, but a little bit of the movement. So any way that you want to trade is acceptable for me. You can trade and make money, right? This is very dynamic. But my point is, the risk management rule is something that every successful trader have in common, right? So if we do the math, 2 trades, 50% accuracy, 1 win, 1 lose, and I made around $2,000, right? So you don't have to be very accurate. You don't have to be very precise. As a matter of fact, I lose the majority of my trades. I just win 42% of my trades, and this last month my average has come down, right? I'm down for the month, but in my entire database, where I have like around 800 trades, my accuracy is around 40%. And with that 40%, I can be profitable. Why? Because this example, every time I win 2-3x. In this case, I'm winning 3x, a little bit more of 3x, like 3.5, right? So that's learning here, where you can make 3-4 times whatever you risk. You don't have to be very precise, because the timing is the most difficult in the market, right? Time the market is the hardest thing I've ever seen. So yeah, you can see how my trade went, right? Let me speed it up so you guys can see the target, and then I'm gonna wrap up this video. Remember guys, there are 3 pillars for trading. There you go, we're hitting target right there. All right, let me pause this video and transit to this. Remember guys, 3 pillars for trading. A profitable system, number 1, right? Your mental state, your mindset for trading, so you can follow that system. And the third part is what? Risk management. If you get to have a good risk management, you can be a profitable trader. Thanks for being fine, and bye now.